In our parlance, what we look at is this, that can I bring three form of capital, which essentially then makes me rightfully the vertical player in the value chain, which is I bring knowledge capital, which essentially is proprietarily mine.
It feels like the word operator is fairly abused.
Majority of the VC, if you look at overall ecosystem, you will find very fewer operators.
Very, very quickly in our journey, we realized ki boss, if you don't have distribution, you really are nobody in the market.
We feel in the last 7-8 years, whatever we have invested, it was much ahead of the time.
If you don't have day zero, you will not be able to kind of make it.
But when it comes to Indian founders and venture ecosystem challenges, the nazariya is always, how do I solve India problem first? Hi, I'm Shubhanga, and I'll be your host as we explore conversations with thinkers, operators, investors shaping financial services and the world of fintech. This podcast is not about headlines or hype. It's about first principles thinking, how capital flows, how products are built, and how real operators make high-stake decisions. Welcome to the first episode of Samvada. Today, we are joined by my partners Abhishant and Pankaj, with whom we'll discuss a little more about what does it mean to be building operator-led fintech fund. What are those areas that we are actually excited about? And how should fintech founders be thinking 2026 and beyond? Perfect. So it's now 8th edition of the Fintech Yatra. And we have now decided to add another layer to the story which you started, Avishant, as the TFM 8 years ago. So we do Fintech Yatra, we do a bunch of ecosystem activities. Pankaj leads it. And one of the kind of fundamental questions that keep coming, and I've had the privilege now of joining your Yatras for the last 3 years, that keep coming is why do we need another venture fund in an otherwise seemingly busy ecosystem? I think that is a question that kind of keeps coming. And if I have to kind of step back and kind of, as a GP and ask this more as an ecosystem observer, this is a fairly relevant question to people who are observing the Indian ecosystem. So how do you guys kind of, what is your perspective there?
अरे तो हम लखनऊ से हैं भाई. Okay, so I think in last 8 years or so, what we have observed is this, that the capital has been there, but capital in most occasions, at least from an Indian ecosystem point of view, somewhere looks for an external validation to come in, except for maybe a small segment which can potentially take those independent views. It looks for an external validation to come in and then essentially get into the domain. What do I mean by that? What I mean by that is, it was 2018, and in 2018, I remember with one of these startups which we kind of ended up backing initially, we went and met with a few investors. And the investors we met, they said, "Yaar, it is sounding interesting, but I am not sure whether India is ready for it or not." And then we went from one investor to another investor to another investor to another investor. Interestingly, 2018, this entity was profitable, so it had all the sides of venture investing which were not acceptable back then. The piece which was not acceptable is that yaar, profitable kaise ho sakti hai startup? So 2018 was the time when the question was, how come a startup can be profitable? So when we went and people were looking at it, they said, if it is profitable, then why they need venture capital? So and so and so forth. So that's 2018. It got repeated in 2019. In 2020 and 2021, when the world was closed, COVID was there, and at that point of time, another startup came in and they said that We are looking to solve for the global money movement part from the point of view of the value chain in which our market exists. Again, the same question came in that solving for global money movement from an Indian context, do we have the tech depth to ensure that frauds and other things can be taken care of? From one investor to another investor to another investor, and every single time you had to look for some external validation of the thought. I will not give you third example. Rather than doing that, what I will try to summarize upon is that yes, Indian venture capital now close to 800 plus venture investing value chains and so on and so forth. The missing piece is somebody who is in a position to take a call on an idea for which market does not have an external validator and therefore becomes an independent call. I think in our last 6.5 years of investing in various forms and shapes, potentially we have done a few pieces which were way too new for the industry back then. And to summarize that piece, in 2025, similarly, we did another entity which was in insurance, surety bonds as a space, which again was a new space. Not many people look upon it. There is no validation available from a market point of view and all of that. So we became the capital which essentially kind of provided the initial piece to the industry which was otherwise looking for an external validation. I think the importance of such investors will remain in the market. Or this attempt is essentially doubling down on our ability to do that with a larger capital.
And essentially you're saying that the operator kind of mindset to actually say, you know what, this is a white space that is begging to be solved, and consequently having a insider viewpoint to solutions, or rather first the problem statement itself followed by the approach to the solution is a key aspect that you have seen it yourself. But equally, I think, Pankaj, from your point of view, and you interact with practically all the venture capital investors in the country, especially who have invested in the fintech ecosystem, right? While of course there is a fundamental kind of need for more and more people to kind of look at Indian venture, Indian fintech, what are the things that you see that they are doing really well?
Yeah.
And what are the things that you think that they actually need hand holding even today, beyond what Abhishant had actually already mentioned?
So I think if you look at the venture ecosystem in India, right, this is something which is not probably people usually say ki, yeah, in the last 10 to 15 years it got explored, but that's a very old value chain. And if you look at some of the VC firm which got started in 1989, 1990s, and when it exploded in 2012, the one thing which you will find very standard in all of these conversations with the startup is like the startup will go into the conversation and post the conversation, they will decide like whether they want to make investment or not, right? You will barely find people in the ecosystem. In fact, in the last 7 odd years, whenever we are having conversation with the founders and taking them to the VC, very few you will find in the market who will come up with a very, very honest and genuine feedback which can actually help them in terms of taking the next sort of step, right? You will not find many. In fact, whenever we have introduced people to the venture side of the ecosystem, we have always asked for that, like, what's your view, what's your feedback? This is like something which is very important for them to fundamentally thought on the next sort of step, like how they have to build, right? So I think that was completely missing. And since via Fintech Yatra and other such initiative we have fundamentally revisited some of the pieces, right? I mean, going to the city, meeting with the founders, having conversations. In those conversations, not just understanding what they are building, but at the same point of time, giving very upfront and honest feedback so they can actually take some sort of next sort of step. And from their point, journey can be something else, right? So I think this is more come from a subject understanding point of view. This is something, and majority of the VC, if you look at, overall ecosystem, you will find very fewer operators, right? It's mostly like,
And I want to kind of pause that operator word, right? And we have heard this from some of the LPs or potential LPs, and LPs, of course. But I'm kind of saying these are reputed individuals or organizations who understand financial services, who have invested in their lives much more than you and I, or cumulatively the three of us have. It feels like the word operator is fairly abused, right? What is how should LPs be thinking about operators, and why are we so different? Or are we actually different, or are we actually just also saying operators?
The good part about possibly what we did is this, that we had no clue that there is something called operator from a thought process point of view. Why? Because whatever we did, we felt that it is an organic and right way of doing it,
The
which
first
is
principles way of thinking about it.
fundamentally, in fact, I will say that for somebody like me, even the word first principle also was an alien word. For me, it was simply that this is the right thing to do. What does that mean? That essentially means that when you invest in a business, what is it which it needs, which via which it can multiply the outcomes for you and everybody else who is associated with that value chain. The foundational piece is that capital is a tool to achieve business outcomes. And if that is what it is, then beyond capital, can you help the organization achieve those business outcomes? I have sat with मेरे दादाजी की दुकान पे मैं गल्ले पे बैठा हूँ. तो when I've sat with him on the shop and the shop floor, fundamentally everything that essentially enables business is not just the money which comes in form of an inflow and outflow, but what really comes in is essentially the deep expertise of engaging with customer, with distributors from whom you buy material, to whom you sell, and all of that put together. Therefore, in that context, the idea of catalyzing the business outcomes is, at least in our view, is foundational idea. If you are not doing that, you are not helping your own capital multiply. And if you are not, say, among those VCs who essentially invest in 100 opportunities in a year, and if you are investing in 4 to 5 opportunities, then you have that bandwidth and obligation to essentially say that what can I do to multiply the opportunity for the startup that I have invested in. Say, in the context of a conversation that happened today, we got one of our portfolio startup to come. We arranged a conversation of theirs with a sizable HR consulting firm based out of Delhi. And we got them to talk to each other that what can they do that can enable business opportunity for them. So I believe that it is foundational responsibility to do that so that you can multiply the capital which comes to you, and not just look at the money that you put on table and leave everything essentially for the money only to be the driver of that.
Just one perspective also here is, if you see majority of the Indian venture ecosystem, you will find a lot of journalist fund, right? You will not find very verticalized sort of venture fund.
We still
You will
have
not find many. There are many.
Yeah.
I mean, there are few, but not many, right?
Yeah.
Like in fintech side, if you will ask me, like probably 7 to 8 funds are there who are verticalized.
Sure.
Right. And I think the operator sort of capabilities will come when you have that depth in the subject, right? I mean, if let's say day in day out you are doing only financial services, right? Or if let's say day in day out you are only doing D2C, or let's say you are doing only manufacturing, right? So the kind of network you will be also able to build in the horizon of the kind of time you're investing, that will actually multiply on a lot of pieces. This is something which is my
which is fair.
So I think what Pankaj stated, I'll just possibly expand that a bit more, which is to say that while you can say that there are, say, 5-6 VCs who firms who operate from a fintech point of view, the problem is that, say, firm A has maybe 3 partners who are out there, who are running the show, they have an outsourced advisory body which essentially advises them on the fintech investments that they are making. There's a firm B, wherein again you have maybe two partners. One of them essentially belongs to a generic value chain. Another who belongs to the value chain essentially does not bring his or her own network. So the problem is not that there are no vertical players. The problem is that those vertical players neither come with the domain depth, India market domain depth, nor they come with the India market network. So if I am not in a position, if I am saying that, acha, so a founder comes to me and says that, boss, मेरी ex आदमी से बात करा दो. And if the partner of the fund says, okay, let me essentially reach out to relevant people who can help you do that, that essentially means that they do not come with the distribution capital of their own. So in our parlance, what we look at is this, that can I bring three form of capital, which essentially then makes me rightfully the vertical player in the value chain, which is I bring knowledge capital, which essentially is proprietarily mine. I bring distribution capital, which is proprietarily built by us. And I am bringing financial capital on top of that. That combination is practically not there from the point of view of fintech investing.
And this is very fair, right? And the other question that kind of keeps coming to us is, especially from an LP's standpoint, right? I'm still kind of sticking to that theme of, why first we answered why we need another fund, why another fintech fund. And for LPs who are listening to us, the other question that comes to it is...
I'll to an extent, I'll disagree with you that it is another fintech fund, because we were... at least in my mind, we were the first ones who essentially invested in fintech as a defined fund. So it's essentially next stage of our journey, not essentially another fintech fund. We were among the people who started that vertical fintech value chain from
which is very fair.
I mean, if you exclude 2 to 3 institutions on the investing side, majority are those who are probably investing from balance sheet or coming out from the corporate value chain.
Yeah. No, I think I'm now kind of putting myself in the shoes of an LP, right? Now, an LP may or may not have evaluated the Indian fintech ecosystem to the depth that Abhishant, Pankaj and Shubhanga might have, right? So from their standpoint, one of the things that kind of comes is, hey, we are essentially in the business of fund management, right? It is a fiduciary responsibility that we are undertaking, which is to actually make sure that the money that they are essentially investing in the fund is going to rightful purposes and is taken care of from an wealth growth standpoint. So the question really is, here are a bunch of people who end up doing Yatra, who end up doing podcasts, who end up doing breakfast meetings and so Capital Connect programs. Are they really serious about managing my money, or are they actually kind of just this is a side business to them? How should LPs look at this?
So honestly speaking, to answer some of these conversation, it becomes very important, like whatever we are doing, what it is adding as an overall view we intend to achieve, right? Let's say, just to expand on what you said, we are doing 10 plus ecosystem exercises, which include Fintech Yatra, Fintech breakfast sessions, right? The idea is basically to bring all the right set of stakeholders in the room and drive conversations, right? And these conversations help in terms of understanding, first of all, about the market, as well as some white spaces as well. Like, we feel in the last 7-8 years, whatever we have invested, it was much ahead of the time. And it has only become possible because some of these conversations came out directly from the founders. And since we all three worked with the bank, and we have also related with that problem statement, and in the room, because you were having bankers and fintech professionals, so those conviction also came in the form of probably distribution. And then you reached a point like this is something which you want to support, right? So I think if you look at, even though we are doing a lot of different pieces, but in the end it is adding to only one objective we all intend to achieve. Whether these companies you will probably invest, or these companies you will probably help, and once they reach to a stage, probably at that point of time you can invest, and you can look at different vehicles, what we are having at today's point of time.
So इसमें क्या है ना, अगर if you expand the conversation and essentially say that what does these activities lead you to? When we started with a limited capital, we started with limited possibilities that we had with that capital, and so on and so forth. And it was very, very quickly in our journey, we realized ki boss, if you don't have distribution, you really are nobody in the market. There are 800 VCs who are out there in the market. Everyone is trying to find the next opportunity which is out there on table. And if everyone is finding that next opportunity which is out there on the table, why that opportunity should go to us and not somebody else who has 10x more money than us, or 20x more money than us, and so on and so forth, and all of that. So anybody who essentially asks this question, that why do you do so many activities and so on and so forth, has frankly dealt with people who have no distribution. I can bet on the fact that 90% of Indian VCs have never invested in building any kind of distribution. Say if there are 100 VCs, tier 1, which is 7 to 15, 20 of them get natural flow, because they have absurd capital available, which gets published. Every single one will essentially run towards them. So that's the tier 1 capital. Beyond tier 1 capital, if you are seen and if you are observed, then market will reach out to some of you, but you will filtered. Tier 3, tier 4, which is essentially, if I start from a hierarchy point of view, say $1 billion fund, to a $200 million fund, to a 500 crore fund, to a 100 crore fund. By the time you reach 100 crore fund, it's like this कि okay, मतलब किस्मत पे आप भगवान भरोसे हो. तो when you are building, you can't be building भगवान भरोसे. So therefore, what we did foundationally is to invest consistently in building distribution. As building distribution to us essentially meant 3 fundamental pieces, which is to essentially build our own knowledge capital. So it meant that we should go out and talk to people who are out there in market, who are going to buy your services or engage with you on a consistent basis. How do you do that? You essentially do that by engaging with them in different platforms. So therefore, event in form of pre-GFF events and a few others became that tool to engage with people so that you understand the subject better. Then, if you essentially need to kind of find white space, again, to identify those white spaces, you need to talk to people who are building distribution on ground. For that, we essentially again need to go out to talk to BFSI, senior bankers and otherwise. And then, when you are essentially looking to, you're not just investing in the day 0 of the journey, you are looking at the journey to go to day 100. And in each stage of the journey, you will have different capital providers who will come into conversation. So therefore, it became important to have programs like Capital Connect, so that we are in a position to have that step by step journey possible for our startups, so that when my startup is looking to raise capital in the next stage of their journey, we are in a position to take them to 20 more people. So therefore, every single piece became an integral part of the distribution puzzle that we kept on solving, kept on investing, kept on doing again and again and again.
We'll continue to do, more importantly. And when you say distribution, just to clarify, it is distribution both on the investor side of the equation and customer side of the equation, if when it is from a founder's perspective. Now let me just switch gears a little to the founder's perspective, right? And of course, we've now been, what is it? Now, week number 4 of Yatra. So we started from Hyderabad, we did Bangalore, Mumbai, and now in Delhi. Delhi, day 3 end. And what are the kind of themes that you're essentially kind of seeing, number one, this year, compared to the seven other Yatras that you've done last decade? And number 2, what is that one overarching kind of theme / mistake / feedback that you have had to give? And I think you have you probably met most number of startups, and we have sat through about 20 odd startups. Um, where are you kind of seeing, Abhishant? I think you should probably start and give us a view of what Fintech Yatra 2026 has been.
So I think in like in most yatras, in this one also, the biggest piece, or I will say biggest contribution that we make to the ecosystem is essentially to tell the founder where not to build. Frankly, unlike any other investor, and we may be kind of doing that out of an absurd kind of belief in what we believe and state and so on and so forth, is to help a founder pivot. Fundamentally, to say that if we have seen that the journeys from a regulatory, from a capital need point of view, from the point of view of distribution build and so on and so forth and all of that, require a particular type to undertake, and if we see that that is something which is missing from the founder's perspective, then we go out and tell the founder ki boss, it's good that you are thinking in this direction, but potentially this is also a way for you to look at, for you to explore, for you to find validation of your idea faster. Say, for example, today one founder came in, he was working with a today the gentleman came in, he was working with the largest, one of the largest players in the world, and he was at a senior management position, the big tech guy, and he was in the senior leadership position with that organization. And in the conversation, what we ended up suggesting to him is a bit possibly capital efficient way of finding validation for the idea and then taking it to the way wherein he can raise larger capital and undertake the journey.
Yeah, which is so essentially one of the things that I have definitely seen, which is very different to standard investor pitches, is we are actually speaking to people who may not even have incorporated their company. I think that is an important layer here, right? So yeah, and including the one other who joined us remotely, right? So even if you are a founder who is thinking about leaving the organization, has some idea that you want to kind of do in the world of financial services, we are absolutely open to talking to you. Whether that leads to an investment from our standpoint or from our ecosystem standpoint is less of importance. I think for us, what we want to start off with is actually starting a conversation, having that human
and I think
connect.
in that, what we potentially bring to you is this as a founder, is this that we are willing to put our neck out in the line and essentially say ki ye mat karo. 99% of the times you will not find an investor who will essentially say ki yaar ye direction mat lo. We are willing to put our neck down and say ki ye direction mat lo. And essentially it helps the founder who is out there in day zero of the journey and they have not yet concretized or formed an opinion what to do. It brings a kind of a perspective of people who have seen, who have observed market closely, and it comes with also a bit more deeper black and white view from a regulations point of view. India is regulated value chain now from a fintech point of view. We have kind of moved on from an innovation first piece to now regulations and defined pieces first. So we now have practically license and other things for most of the things.
So Pankaj, I think what are the themes that you are essentially seeing, right? I mean, especially, you have done the Yatra from year 2019 onwards, I think.
Yeah.
So how have the themes evolved in the world of fintech?
So in the first year of Yatra, we have mostly seen infrastructure side of the stories, wherein in that year we have invested in companies like M2P and bunch of others. Discovery was another one. And then later on, we have seen themes evolving around cross-border payments to data side of the story. To last 2 years was mostly focuses on NBFC and lending side of the pieces, right? Specifically on the secured lending side. Last 1.5 year, we have seen mostly startups who are building around AI because that's, I think, a very, very natural piece.
How many non-AI startups did we see? I know one. But
very
I don't
very
think
few, I guess. I think if you say like if we have met with almost 300 odd startups so far, so out of probably 80, more than 85% of the conversation, or rather 90% of the conversation was into that AI. Like whosoever was doing something else also now is adding layer of AI. So that is like something which is coming out very often in the conversations. But we feel a lot of other problem statements still exist. India is not probably at the stage wherein other developed markets are. And India is also having their own set of problem statement which can be solved and which can be picked up. And we usually communicate all of those sort of problem statement very often in the conversations also, right? Like we still feel trade finance is like something which is very deep in the ecosystem wherein nobody has solved yet, right? And it's very hard problem to pick it up and solve. Likewise, we feel fraud is something which is like how it is emerging in the Indian context. Something should come out in that direction as well, right? So there are a lot of white spaces wherein people can attempt, people can build, but होता ये है कि मार्केट की जो नॉइस है वो कहीं ना कहीं फाउंडर को मजबूर कर देती है कि यार इस नॉइस के साथ ही आगे चलें तो शायद क्या पता हमें इन्वेस्टर सुन ले और हमको आगे एक कदम बढ़ाने का मौका मिले। मेरे ख्याल से उस नॉइस से कहीं दूर रह के टू आइडेंटिफाई सम ऑफ दीज वाइट स्पेसेस, सॉल्व अराउंड इट, एंड देयर आर पीपल इन द मार्केट बाय द वे हु कैन आल्सो बैक सम ऑफ दीज आइडियाज, राइट? who can look at some of these problem statement and can also support. So I think that is like some of the themes we have seen, but
I think I want to kind of talk to you more about so there are 2 or 3 kind of vectors that kind of came out of your conversation, right? So one is themes that we have seen till now, but more importantly, given our experience in the financial services ecosystem, what are those white spaces that founders who are starting up today should be thinking, is one question that kind of comes to my mind, which we can probably debate a little more about. The second thing is around how are we differentiating between true AI startups and how should we be thinking about it, and and those who are essentially building wrappers on top of global big AI startups, or I don't know if we should even call them startups anymore, big AI enterprises. And the third vector that kind of comes to my mind is essentially from a founder standpoint, right? We have over the last kind of decade seen and heard more often that look at the problems around you and try to solve that first, versus when you look at the global examples that we are all quoting in our conversations and we are quoted, they don't necessarily look at their own geography or their own kind of neighborhood to essentially think about what are those problems that they should be looking to solve for, right? I don't think a Perplexity or an OpenAI or a Anthropic, which have kind of emerged in the last 3.5, 4 years, or even the more latest ones, have thought about मैं US के San Francisco neighborhood या फिर California as a region or US as a region plus Canada, how do I solve problems for them? There are problems, there are enough and more that we can speak at length, but that's not their nazariya when it comes to problem solving. But when it comes to Indian founders and venture ecosystem challenges, the nazariya is always, how do I solve India problem first? I'm not saying it is right or wrong, but it is an observation that has come to me increasingly over the last few years. So those are the 3 vectors that we can actually kind of discuss about. So let's start with the first one, right? Which is around what exactly are the white spaces that you guys are actually, that you think, of course, each of us have our own kind of thesis around white space, but let's start with you, Abhishant.
I think for me, if I look at it, for me, the biggest piece from the point of view of opportunity will lie in fraud. Frauds of all type, all nature. And in that scheme of thoughts, I think whether it is transaction fraud monitoring, whether it is fraud from the point of view of your lenders who essentially go for the loan defaults and things of that nature, wherein the idea is to knowingly default on something, and so on and so forth. So every single category will have fraud of one or the other nature. Now, within that, One is to essentially look at fraud only from the point of view of centralization of data, and essentially that data being so powerful that it will essentially kind of help anybody who builds on top of that data, and basically data providers and all of that, and then you are in a position to solve for it. So one is that kind of an approach, which of course, which then requires, in our case at least, it requires all the holders of that data to be able to kind of consolidate, provide, pull in, and everything of that nature. Or essentially to look at it from the point of view of some of the models which essentially are zero knowledge proof models, wherein you are in a position to maybe not exactly kind of stop every single fraud, but you are still much, much, much better than what
Sure.
you were
What
earlier.
other spaces?
Sorry?
What other spaces? So fraud is clearly one that we speak
So I
about.
think in the last 10 to 15 years, a lot of innovation has happened on the retail side of the use cases.
Yeah.
It means like retail banking side of the use cases. And I still feel corporate banking side of the use cases is still not there. I mean, very few in the market are there who has actually picked up and solved. But I feel there is a huge gap wherein the people can come up and pick up some corporate banking use cases and can build on top of it. Trade finance is one of such use cases which they can pick it up. CMS is another one, and bunch of other such streams are there. Second, treasury is the third one, and multiple, right? The second, I feel in India, we have seen infrastructure on the payment side, data side, lending side. But when it comes to wealth, right, we have still not seen, except like some large players, which are there from an infra point of view, like CAMS and bunch of others, Kavi. But we still feel but there is a need of an entity which could be more like a middleware between AMCs and the distribution, right? Very similar to the companies like Atomic, which is there in the US, and like how the wealth has exploded in India. I think that could be an interesting piece to look at, and someone can build around it, right?
Yeah, and the other two that I'm actually very keenly looking at is, of course, insurance as an ecosystem, which is by and large, not really kind of solved. If you look at any, from a distribution standpoint, going back to, how many of us actually kind of have access to insurance to the extent that we need, is one lens that I think we continue to kind of look at. Cybersecurity, I think, is an increasingly relevant, given that more and more of our our interactions are digital. Yeah. And increasingly now with on the fringe of, I don't know whether I should call it fringe, but there's more and more advancements in the quantum technology that is happening. So quantum cryptography and the cryptography, how can actually quantum end up breaking the security ecosystems that we currently have is definitely going to be far more relevant, especially when you combine quantum with AI. I think those are some of the ideas that I would love to kind of see in this. But going back to the second kind of vector that we said, right? One of the challenges that I'm actually kind of having really is like you said, every second, not even second, right? Every 9 out of 10 companies essentially have AI keyword in their this one. How should founders themselves kind of think about what is it that makes sense from an investor lens as well as from a customer lens, when they're thinking about wanting to build a venture investable business? Between building a even Perplexity at one point was called it is a wrapper on core, but they have built a meaningful business. It's not obviously as simple as just calling it as a wrapper. It is. So how do you kind of see solutions that are coming to Yatra, which seemingly look like they are wrappers, but there might actually be more to it underneath? So how do we go about evaluating it?
So when we look at the solutions which are coming from an AI point of view, we'll have to look at them in the lens that are they B2C or B2B? If they are B2B solutions, then in B2B solutions, we'll have to look at from an India context, or frankly anywhere in the world, it is important that do they have people who have understanding of distribution and who can build distribution. At least from the point of view of an Indian context, what happens is that most of the times, at least the AI first founders who come, 95% or 98% of them have no view on the distribution. They are amazing people from a tech capability point of view. They understand, they appreciate, they they are possibly at best from the point of view of even some of those who come from global markets, but they really don't understand the India distribution. So if so what we try to understand is that, do they have people who understand India distribution? Can they essentially build that? Do they have enterprises which will be willing to take a bet on them, and so on and so forth? And beyond all of this, are they working on optimization of solutions which have been already deployed in last few years? Enterprises follow their own sales cycles. It is very, very difficult for an enterprise to remove one layer of enterprise software with another layer of enterprise software just because there's somebody else who is selling a better software. I remember a foreign bank when I used to work with them. Till 2014-15, they had DOS, the black screen in the background. And I used to get perplexed with ki ye kya hai. So essentially to say that enterprise sales and the cycle of enterprise product build is not something which is essentially an easy cycle to undertake. So from an India context point of view, one needs to find essentially somebody who is in a position to drive that kind of a sales. That applies a lot more to wrapper value chains. So if you are a wrapper, what is out there is essentially to grab the opportunity in market, go out, run for it ASAP. If that is not what it is, then there is another wrapper who is running for it. So which means that the differential between one wrapper and another wrapper is either the kind of capital that you can raise and then hire entire distribution length and breadth, or essentially you come up with a team which has a great combination of what we call as PST, which is product sales and tech, which essentially then can drive the initial numbers that you need as proof of the PMF and the scale that you can build.
Yeah. So going to the last vector for today, right? One of the news points that I probably shared on the team group today morning was, I think, a tweet by Harry Stebbings, who runs 20 VC, where he has quoted, I think it was Fixer AI, but I might be wrong, one of his AI investments, which were a team of 4 people, sub 1 million ARR 12 months ago, now tracking at about 35 million ARR today, right, as we speak. We have started to see such what do you call, companies in India, from India as well, with Emergent kind of taking much of the media space there. But this is where it kind of brings me to the question of, are we, as the venture plus the founding ecosystem in India, focusing a little too much of problems just around us, because of which we are essentially building solutions which are focusing only around the Indian ecosystem, because of which we are limited by the headline cap, which is the GDP per capita that the country actually has to offer. And there is, like I said back then as well, rightly, there is no right and wrong answers to this. What are your thoughts on this? Maybe Pankaj first.
So I feel, just in the example which you took, right, only 2 things probably worked in that context, right? The one could be the product need in the market, right? And along with the product need, the team is capable enough to take that product to some right set of institution, which has actually held them in terms of taking that from 1 million to 20 million or whatever the number is, right? And this is like something which is my observation, because we have done a lot of global fintech yatras as well. Whenever we meet with the founders who are probably building from Europe or probably building for US or any other market like Middle East also, the perspective of the founder is always like to build for the global, right, from the day one. As compared to the people we meet here in India, right, they probably want to solve for the India first, and they may look at outside opportunity, or could be the people who directly, starting from the US or other markets, right? Uh, and there are a lot of constraint around it. Like if you're starting from US, then you need different sort of a capital because you need to hire resources, you need to set up office, right? So all of that sort of a cost. As compared to the people who are probably starting in India, they may not need probably that sort of a capital. So I feel this is very natural sort of a piece with what Indian founders are facing, right? And we are also not having depth of the capital like how other markets are having, right? Like the depth of the capital like Middle East is having or US is having. I think so this is like the fundamental reason which I feel not allowing Indian founders to take some of these sort of journeys, right? The capital depth is the first one. The second is like their own sort of mindset, which probably why don't they think from the point of view कि यार मैं India may, let's say, just operate in 6 months, do everything, build distribution, build a product which can actually make sense to some of these large organizations and just go to the global. But to do all of that piece is the capital. So this is more like a flywheel wherein, they just again stuck कि यार ये आएगा तो ये करेंगे तो ये आएगा, right? So this sort of an
So मैं इस पे थोड़ा सा डबल डाउन करता हूँ.
And also tell what is it that we should be doing as an ecosystem differently to actually kind of enable some of these. I have a few points, but I'll add to what you said.
I'll just double down on what Pankaj said. So if you look at, say somebody who is out there in Sweden, somebody who is out there in even smaller geographies and so on and so forth, they're very clear on day one of their journey कि यार स्वीडन में तो इतना ही लोग हैं, which is essentially in our nation, we are a nation of say a few millions. So you're clear. That if I want to make it big, I don't have domestic market to make it big. So therefore, your starting point should be more beyond your domestic market. Otherwise, you will not. Otherwise, आप परचून की दुकान खोल रहे हो. There's no point, right? So in your domestic markets, you know that you have a limitation. Also, and as a result of that, and Europe is also in that sense, in the history of nations, is a very new homogeneous concept. 30-35 साल is not a long duration in the history of the European value chains which came together, right? So fundamentally to say that when you know that you are geographically constrained, you are constrained from a demography, you are constrained from multiple other points, your day zero should be about building global. If you don't have day zero, you will not be able to kind of make it rightfully. On the contrary to that, Indian founder knows that there are for me, the starting point is essentially not that I don't have geography or I don't have demography and all of that. So for them, it is very hard to neglect that piece. And it is not as if that the Indian value chain is not creating outcomes, because if you have 129 or 30 unicorns from the market and you are third or fourth largest in terms of number of unicorns globally, so which means that you also know that there are enough and more opportunities which are getting built at this point of time in your environment itself. So you are not constrained from the point of view of your geographical, demographical, or any other advantage. So that becomes one big piece. The second piece, which Pankaj talked about from a capital depth point of view. Now, if you remove the Europe and the other parts of it, US, and frankly, when I went to Europe a few years back, the realization was that the number of investors who are out there in UK alone was more than all investors put together in entire Europe. So Europe, essentially in that sense, is capital constraint. If you look at much of Asia outside of India, Japan, China has limited venture investors per se. US is the holy grail of venture investing. But you'll also have to look at the fact that unlike US, much of us, specifically in Asia, to an extent part of Europe as well, we are first or second generation of entrepreneurs and venture investors. US started venture investing journeys in 40s in the post-World War Europe, US, and so on and so forth and all of that. Since that 40s journey, you have seen 4 to 5 generations of founders and investors. The generations of founders and investors also meant that what I talked in past in our conversation, Shubhanga, which is risk muscle. Your risk muscle got built over the period of time because you have seen so many generations of founders and investors. You know the multiplier and the opportunity which comes along with that. You see the outcomes which come along with that. Each time a higher risk creates a higher reward, there's somebody who's looking at that and aspiring for it. So therefore, that essentially brought in today possibly the fourth and fifth generation of founders and investors, who therefore bring a very, very different kind of risk capital which does not exist in our markets, because हमारे वहाँ founder भी नया है, investor भी नया है. ना तो investor ने पैसा ढंग से बनाया, ना founder ने ढंग से बनाया. So if you have the two core constituents of the value chain, which is investor and the founder, and both have not at scale made money, and you have very few examples of that, it becomes very, very difficult to essentially kind of find that depth of capital. But there are certain micro examples which essentially point to you that if something right is done in one particular geography, it leads to multiplier impact in that geography if the entrepreneurship is at the core of it. An example of that is AU's success coming out of Jaipur. The success of AU that came out of Jaipur, and Rajasthan and Jaipur essentially being a society of entrepreneurs who would take risk in any which case. Today you have 5-6 other NBFCs ranging from 500 to 1,000 crores to 10,000, 15,000 crores, who have grown there because of the success of AU, the talent that it got to the market, the people it attracted, and it made the idea of entrepreneurship, the risk associated with it, lucrative enough for people in that market who are entrepreneurs or risk takers on their own to take the plunge. So it's essentially not just about the depth of capital, but also the kind of capital and the risk the capital is willing to take.
Oh, fantastic point. I think the last question that we have not answered yet is, what are those, especially when we look at our world of fintechs and financial services and tech for financial services, what are those, or are there any structural changes that you are seeing that ought to get implemented over the next 3, 4, 5, 6 years that can enable? One is more such Jaipur equivalent initiatives, and equally enabling, especially given that we invest a lot more on the infrastructure side of the equation, while of course if you look at all the unicorn examples in the fintech ecosystem, it's mostly consumer. I wouldn't say only, but mostly, right? Perfios is obviously an example that stands out clearly in the infrastructure space. M2P is going there. But what are those structural changes that needs to happen from your vantage point for B2B and some of the white spaces that you spoke about, Pankaj, which is trade finance, or could be in wealth infrastructure or insurance, that you see that Indian entrepreneurs are probably not having? They're constrained, which is why they're not able to build a Stripe or a Revolut from the market that we are today.
I think the piece you need to also see that for any society, what do you define as, say, kind of a disproportionate capital which changes everything?
Yeah.
And that also becomes a number that somebody who is looking for a disproportionate opportunity potentially aspires for. In India, that disproportionate capital, which can potentially give you access to 99.99% things that you are looking to have, is anywhere in the range of 400, 500 crore to 1,000 crore. Which essentially means if I as a founder have access to that as an outcome, then I have achieved every single damn thing that I need from the point of view of the country and the ecosystem in which I am placed, I am going to live. And I'm not shifting myself to Dubai, or I'm not shifting myself to US, to Bay Area, because then the parameters change totally. So if I'm not doing any of that and I'm staying and living out here, then that kind of money helps me achieve every single damn thing that I'm looking to have. That essentially means that for me to then, if I reach that point, that creates a peace in my mind, which essentially then, to an extent, if there is a possibility of a much larger outcome, stops me from that, because the differential it will create for me is not going to be the huge.
Essentially, you are. I mean, I want to kind of also in defense of the founders, right? I mean, in the sense, it's also not necessarily true that money after a point kind of becomes less of a driver for what you want to do, is what I've heard. I mean, it's still a driver for me, but it does beyond a point, is what many people have kind of quoted, right? So if you look at the likes of what Google DeepMind guy is doing, or what an Anthropic guy is doing, it's not clearly about, not only about, right, the financial outcomes that that they are getting out of it. So clearly there has to be something deeper beyond financial outcomes that ought to drive Indian entrepreneurs. And I'm sure there are. I'm not talking about the extremes. I'm talking about the normal distribution here. But we don't necessarily see those in the founding teams of Indian yet. But I'm going to leave that as a thought. I'm not inviting responses to that. It's been obviously in a very engaging conversation, and hopefully the first of many. And what we will do is, going forward, we will actually talk a little more about some of these white spaces that we are kind of saying, and hopefully give the ability to demonstrate what we have claimed on this, to say that we are operator first, we understand the subject. What is it that we understand? At least we should be able to hopefully kind of open up our conversations that are otherwise internal, and build pretty much this venture fund, quote unquote, in quasi public, if not fully public, right? So thank you so much again. I know, Pankaj, this is the first of your public appearances, but hopefully it'll be the first of many. Thank you so much.
Thank you, Samvada.